This morning.
All right.
Here we go. Good morning, everyone, and welcome to October's Pitchmasters workshop, brought to you by Next Raise, Next powered by Shulman Rogers, Deloitte, Silicon Valley Bank, and Capital Raise. We're really excited to be here this morning with three incredible entrepreneurs who are going to practice their pitch and receive feedback. My name is Lisa Friedlander. I'm the CRO over here at Next, powered by Shulman Rogers. Next is an innovative and award-winning model for the delivery of legal services to startup and emerging growth companies, with lots of value-added holistic services layered on top to de-risk your startup as you grow. It's my great honor to introduce Krista Smith from Deloitte, have her introduce herself. She is one of our sponsors and guest judges today. Krista.
Thanks, Lisa. Hi, I'm Krista Smith. I'm a managing director with Deloitte. I lead our early stage practice within the greater Washington area. We serve a portfolio of about 40 audit clients that are at different stages of their journey from startup to IPO.
Awesome. Thank you. And honored to introduce my colleague, Hunter Haynes, also from Next. Hunter.
Thanks, Lisa. I won't go into the next pitch, as Lisa just summed that up quite well, but my practice is focused on capital raising and equity management primarily. So excited to see these pitches today. Thank you.
Awesome. Thank you guys so much. All right. Well, first up is Brian. We'll have you share your screen. I'll start. Reminder, you have 6 minutes. I will be a little bit strict on the time since we have three of you, but whenever you're ready, we'll turn it over to you.
That sounds great. Go ahead and get this up here. All right. Can you guys all see it?
We can. Looks
awesome.
Great.
So I'm Brian, co-founder of OpenPitch, and we're building a central collaboration tool for founders and anybody with a vested interest in their company. So I'm preaching the choir here probably for several people, but when founders don't consistently send updates, they're missing opportunities for help and hurting the relationship. So why do so many partnerships go silent? So we got lag here. Well, we'll start with the obvious. I mean, updates are time consuming. To do them well, companies, founders spend hours doing it. But on the investor side, even when updates do come through, a lot of times they feel a little fluffy, like founders are trying to impress them or tell them what they want to hear, as opposed to being real and transparent about what's going on with the business and where they can use help. And a lot of that boils down to the expectations. When updates are introduced to founders, they're almost always done so as a requirement, not a collaboration opportunity. So it's hard for founders to justify the time investment if they don't really understand the benefit. So our solution is really built around two pillars: save founders time and help their partners add value. We automate key financial metrics directly from bank transactions, use AI to help founders write investor updates in minutes. And then on the stakeholder side, make sure that they have clear, standardized KPIs across their portfolio and they know how their founders are really doing and where they can add value. So let me just show you guys real quick. This is the founder side. We integrate directly with the bank accounts through Plaid and receive read-only transaction data, which gets fed to our algorithm, breaking down what's funding, what's revenue, and whatnot. And that powers your cash basis dashboard. So what's our burn rate? What's our runway? What's our profitability? Again, from a cash basis perspective, this is intended to be the cash source of truth for your company, not an accounting system at all. We do some light reporting, again, all automatically fed by the bank transactions. You can export files into different formats. And then when you're writing updates, we use AI to make the process really easy. We feed it with the high-level financial information. You can create your entire update directly on the platform. We prompt little questions just to try to get the juices flowing for the founders. And again, you can use AI to make the process extremely easy, write concisely, professionally. When an update's posted, it's instantly shared with any of the connections on the platform. And those are always in the control of the founders. They know exactly who they're sharing with and what they are seeing. On the investor side, we provide a high-level portfolio breakdown, revenue funding. Those are fed automatically by the bank transactions as well. And the only manual input on the founder side is their employee headcount. We also allow investment groups to break out individual portfolios. And then those people, an angel or a cohort leader in an accelerator only has visibility into the companies they've been assigned. They can sort them by metric, and then investors have a high-level view of that same dashboard without access to the transactions. Eventually, we'll be componentizing that so founders can share exactly just the metrics that they want. And all the updates are centralized. Nothing gets buried in email. When companies or when there's turnover at the investment office, really easy to get new members up to speed on where the companies are. So we monetize kind of on both ends of the spectrum. On the investment group side, we charge based on the number of connected companies that they have on the platform. Everyone gets started for free. You get up to 3 free connections, and then it's tiered pricing after that. For startups, we have a freemium model. You can get started for free, and the price of higher plans decreases with the number of connections that you have. The more connections, the more the better price you get. We want to incentivize those network effects and actually get, people who are on the same team working together consistently. Super early in the process. We launched our MVP in July. And since then, started generating revenue. We're at about 20,000 ARR. That is not our primary focus. This is our primary focus, seeing that company's number continue to rise, seeing the engagement on the founder side. We now have over 100, and we have 10 funds that are on the platform. And this is a pretty well-known industry problem. There are tons of reporting platforms out there. None of them have been able to crack this at scale. That's because when you use a self-reporting platform as an investment group, you're basically giving your founders a chore every month. Everything about what we're designing is intended to add value for the founders, so that results in cleaner, more actionable data for their investors. We know the market is validated on the investor side. They want this. The challenge for us is getting founder adoption and getting them comfortable with the idea of connecting and sharing with the people who should be really on their extended team. If we're able to do that, that opens up a massive, massive market. Strictly looking at the investor side, there's over 16,000 investment groups in the US, over 13 million angels. Both those numbers are rising pretty considerably, especially the angel side. And there are over 5 million new ventures launched each year. So when it comes to monetizing on the startup side, our goal is to be the most cost-effective, most valuable solution to manage your entire investor relations and be the central source of truth, which kind of leads us to the long-term vision of the product. We do not need to recreate all the metrics that exist. We simply need to work with the existing tools that founders are already using. We've planted our flag in the ground as we are going to be the best cash basis, like financial health tool through the bank integrations. But then the next step is adding the accounting systems, adding the CRMs, so you can have a real full view of how a company is doing, and then put the ability in the hands of the founders to craft the narrative so they can leverage the full expertise of their stakeholders. With the rise of AI, we have a little bit just as a writing tool at this point, but there is so much potential to expand upon this, where by being the source of truth, we can actually provide really meaningful data to help founders tell the story of their company and get help where they need it. So here's the squad. We're a lean, cohesive bunch. We've been together about 2.5 years, but we've only been working on this for 7 months. We previously built a personal finance app, pivoted out of that. We have deep experience in tech and the banking side of things. And yeah, get a lot done on very few resources. So this ask is geared more towards an investment group, but sounds like everybody here kind of touches the startup ecosystem in some capacity. So the main ask is make people aware of this. It's a free tool that they can use. I would love to have a conversation with any founder who you think might be interested in using this. Getting that founder buy-in and adoption is the most important thing for us, and we're building it to add value for them. We are as scrappy early stage startup as you can be. So
I'm gonna have to cut you off at that scrappy note.
Awesome.
You're well over 6 minutes. So
okay, well, thank you.
Just want to stop you there if that's okay. And if you don't mind, you can stop sharing your screen. We have one of our sponsors and judges who joined, who is now on. Josh, where are you? I think you're here. There you are. Josh, you want to introduce yourself in SVB real quick before we give feedback to Brian?
Absolutely. Thanks, Lisa. I'm Josh Shulman. I'm Director of Startup Banking with Silicon Valley Bank. I oversee our entire eastern half of the country as far as a portfolio and practice goes. I'm a former operator as well, though, and I think that's what's really unique about our startup banking team. We're not traditional bankers. We're comprised of former operators, founders, and investors. We understand startups and we're relationship focused. And so different ways that we can think about a platform for founder success is where we try to align, and why we have partners like the next team at Shulman Rogers, and why we want to engage with these things. And so I'm thrilled to be here. And Brian, I caught you halfway through your pitch, so I don't want to give feedback on something half-baked, but in terms of synergies, you have to imagine we have quite a distribution channel for you. We should totally talk offline.
Yeah, man, I'd love that. That'd be great.
Okay.
Josh,
Thank you.
anything from the latter half that you want to mention other than the synergy piece, which I'm sure Brian will be happy to connect with you. Anything you saw at the tail end that just stuck out real quick?
Yeah, I think one of the things that I had open questions on was really the pricing page. And so, you know, what struck out to me right away was simply that there was this caveat around more of a freemium plan, but it was only a caveat. I think there is an opportunity to unpack there. If you think about highlighting the distribution channels that you have at your disposal, if there's a direct line to the startups themselves, and that is an acquisition channel, like what does that look like? What are the economics of a freemium plan? What are those initial points of monetization that you're thinking about too? That would be helpful to understand that. Or being very explicit that's just not really a focus area at all right now. But if it is in any faction, I think just details on that is great.
Awesome.
100%.
Thanks, Josh.
Agree with you.
Appreciate you being here. Krista, any feedback for Brian?
Well, one point that I had was there's so much talk about profitability these days. And so, and I may have missed it on the KPI slide, but just working in something on that slide to show the startup's profitability, and then also talking about your own profitability. What level does this need to get to, and what does that runway look like?
Sure. Yeah, that makes sense. I know the video went a little quick, so there was a kind of like an operating cash flow, which we look at profitability from not an accounting perspective, but from a cash perspective. So that is tracked in the platform.
Okay.
Yep. Thank you.
Awesome. Thank you, Krista. Hunter.
Yeah, thanks, Lisa. Brian, I think my comments are mainly from the perspective of an investor looking at this. Two things that I wasn't entirely clear on was when you reference connections, like who are these connections? At first I was, it sounded like this was more of, geared towards startups looking at informing their investors, and then you switch to kind of the funds investing, updating their LPs. And so it wasn't, I could tell by the end that you're kind of targeting both. But an investor may want a more narrow focus on kind of what your target is right now, kind of to reach those next milestones. Another thing I thought you kind of glossed over was kind of your current traction. That's something very powerful. You spent a lot of time, I think, on how the tool actually operates. And then there was like a 10-second page on, hey, we actually have these users already. And then it went really quick. And I was trying to digest that. And I think, from an investor perspective, they're going to want to know your traction, how that pricing model, like Josh said, works, as opposed to, they know your underlying tech, but if your tech's working, you have traction and you have the pricing there that they're more focused on, at least from my perspective.
Oh, makes a ton of sense. Thank you.
Yeah, great.
Brian,
feedback.
one other
Go
thing
ahead,
I wanted to
Josh.
mention, I'm sorry, Lisa, was
No, go ahead.
so I've been a former user of Standard Metrics. When I was on the operator side, I was responsible for inputting all of that information. So investors understand this problem at least to a strong enough degree. Of course, operators and founders do, but how do you? I would love to hear, and if this was in the beginning of it, I apologize for missing that. But if there's a more of a narrative and like a storyline that can be conveyed around, like how do you convince investors to then convince their underlying portfolio companies to adopt a solution like this? Because it's the whole friction problem. Like, I get that it helps the end user, but like, how do I introduce this into my process? And then I have to be an advocate and be this distribution mechanism to all the underlying portcos. Highlighting how that motion can work seamlessly, I think, is a good way to drive both adoption on a storyline, but also the people you're pitching to, these investors, are going to resonate with that.
Yeah, no, I totally agree. That's the biggest challenge that we're working through right now, is that framing between founders and their investing groups who want this very badly, and the founders who need to adopt it in order for it to work. Are you in DC at Startup Week?
I am, Brian. Yeah.
All right. Let's
He'll be here this afternoon.
Awesome.
All right. Terrific. That was terrific feedback for Brian. Appreciate everyone. Jason, when you're ready, feel free to share your screen and get started.
Yeah, Let me share. Can you guys see that?
Yep, looks great.
Yeah, well, great pitch, Brian. I thought that was awesome. Hopefully I can do just as good. But today I'm going to walk you through Alperion and our pre-seed pitch. My name is Jason Harworth. I am the founder and CEO of Alperion. And our mission at Alperion is to make at-home weightlifting accessible with the Astra Rack. So most of you have probably been in or at least seen a weight room. You know that there's big, heavy things in there, right? All of that equipment is super heavy and it's basically consuming. And for just a second, I want you to imagine trying to put some of the equipment in that room into your house for a home gym. That doesn't make any sense, right? You'd have to dedicate a whole room to it. It would be literally hundreds of pounds of weight that you would have to move into your house. You'd have to buy a lot of different parts costing you thousands of dollars. And if you didn't own your home, it literally would be impossible to do that because of all the logistical problems centered around the space and weight consumption of weights. If you're renting a house or apartment, you probably don't have the space for it. And also, you're not going to move it again in a year when your lease is up, right? So for the young generation who don't own homes but love to weightlift, it is really impossible to own a home gym, so they're forced to go to commercial gyms to work out. And in a generation that loves health and fitness, this really doesn't fit our lifestyle. We don't want to commute to a gym. We don't want to wait for a machine. We don't want to pay a never-ending subscription for our health. We wish we had a gym experience that fit our lifestyle, not the other way around. And so at Alperion, we're introducing the Astra Rack to weightlifters who can now weightlift wherever, whenever, and however they want. It's a portable power rack that outputs up to 400 pounds of force in a machine that weighs less than 50 pounds. It's compact, taking up no more space than a coffee table, so you can work out right in the comfort of your living room. And it even folds up into a suitcase so that you can easily transport or store the Astra Rack. Now you can put it in your closet when you're done with your workout instead of dedicating an entire room to your home gym. You can do almost any weightlifting exercise with the Astra Rack. It's designed to look and feel like traditional free weights, and our patent-pending resistance mechanism feels just like gravitational resistance when you're working out. So it delivers that weightlifting experience that weightlifters want. With the Astra Rack, we're targeting experienced and high-resistance weightlifters because we provide a lot of value to them, right? For them to buy a home gym, they'd have to buy that multi-100-pound system. And now we're giving them that experience in a suitcase, which gives them a lot of value. And we also know that they're already dedicated weightlifters. They work out multiple times a week. If they use and love the Astra Rack, they will use the Astra Rack for decades. They will become our core customers. They'll want to build on their experience. And they'll also tell their friends about the Astra Rack, becoming our champions of the Astra Rack, if you will, giving us organic growth. They're also the experts in their field. So when a new weightlifter comes in and wants to learn weightlifting, they will go to that expert, that experienced weightlifter. And if that experienced weightlifter trains them with an Astra Rack, that new weightlifter will want to use an Astra Rack when they move on from training. So looking at our market size, the weightlifting industry is a huge market containing 24 million Americans who have weightlifted once in the past year. The high resistance market, which is weightlifters who lift over 200 pounds in one exercise, contains about 5.5 million Americans. And using that data and our competitors' early lifetime revenue data, we can expect a serviceable obtainable market of about $25 million in our early lifetime. Looking at our competitors, there's a lot of competition in weightlifting, obviously. We have traditional free weights like Rogue Fitness, those types of companies. And then we have other resistance-based machines like Tonal, Oxford, or Max Pro. Max Pro is the most similar to us in terms of portability, but they sacrifice a lot of the weightlifting experience. They don't deliver that type of gravitational-like resistance to weightlifters. So an experienced weightlifter is not going to want to use that. Tonal and Oxford are more luxury items, being very expensive and containing high required subscription costs to use their machines. And they're also not portable. So again, they don't really fit the lifestyle that our target audience wants. And Rogue Fitness, the free weight company, Obviously, as you know, heavy and space consuming, the logistics of that don't really make sense for our audience. So in this pre-seed round, we are raising $300,000. This is going to be really targeted towards product development of the Astra Rack. And looking at a short-term timeline of what we're going to be spending that money on, again, mostly in the engineering sector towards building a robust product that we can build and ship out to customers. You saw some animations of our current prototype that is mostly a proof of concept, and we need to build that out so that we can confidently ship that out to people so that they can use it themselves. And so we expect it to take a little under a year and $200,000 to reach that final MVP Astra Rack. And leaving this year, we'll have a burn rate of about $45,000 a month. Looking at the longer term expense plan, once we finish product development, we can really increase our marketing and manufacturing expenses. So we'll be in the 6 months prior to our launch in Q4 of 2024, we will be really focused on generating awareness for the Astra Rack, and we'll also be developing an efficient manufacturing process at that time so that we can order materials in, assemble them, and ship them out to customers. So prior to the start of sales, we expect to have a peak cash requirement of $850,000. And after we begin sales, you can see our expenses go up because we will be generating a lot of revenue and ordering materials and paying for assembly labor. So in our first year of sales, we project that we'll generate $4 million in revenue, and I see the clicking it up sign, but so aggressive revenue out of the gate, directly to consumers. And then with those expenses and revenue, our predicted operating profit is shown here. In that 18-month period, we can expect to break even by Q4 of 2025 with an average gross profit margin of 52%. This is the
Jason, I'm
team.
gonna have to cut you off. I'm sorry.
Sorry. That's okay.
Sorry,
Well, thank
that
you.
was
I appreciate it.
full 7 minutes. Yes, tried to be
Sorry.
lenient. Go ahead and stop sharing and we can start off the feedback. Krista, do you want to start us off this time?
Sure. Just from a time frame point of view, one thing I think you could cut is some of what you said in the beginning, defining the problem. Because I think, like, I'm an at-home exerciser, so it's like you either get it or you want to go to the gym. And so I think if you're looking to cut time, I think that's one thing you could do. The other thing, and I do not lift heavy weights, but my impression of folks that do are bigger than what you had as the model. And so that's probably, I don't know if that was a friend or someone else in the company, but just if you're targeting folks who lift heavy weights, I'd maybe put somebody in who looks more big. I don't know if that's the right word.
Okay.
That's great feedback. And yeah, I agree. There was a lot, a lot of time up front, Jason, that you could have used in the background. Hunter, you want to go next?
Yes, sorry about that. No, Jason, great job. I think my two comments, one is maybe condense your financials down a little bit further. It was a lot to take in, in a short amount of time. And frankly, as we all know, their projections and they're probably going to change drastically. And so I think that will help shorten the time frame. Another thing that I think is going to be very important from an investor perspective is kind of your go-to-market strategy. Really finely tuning this. There's a lot of players in this space, and I think one of my questions is how does this not turn into the next Peloton, where you sell all of the products, but then once people have the products, your sales start to go down because you don't need a bike anymore, you don't need the machine anymore. And so just a question of your go-to-market strategy, or how this expands beyond maybe the initial product, because if it really wasn't for the pandemic, Peloton probably would have went out, filed for bankruptcy, because everyone had bought the bike and they were relying solely on subscriptions to support their revenue model.
Right. Yeah, definitely. One of the nice things about it is that it's modular, so we can create new products that build on that experience. But yeah, that is definitely something we should tackle in our pitch, I think.
Sorry, I was on mute. Thank you. Josh.
Yeah, thanks, Jason, by the way. Appreciate you running us through that. An initial point of feedback is, yeah, that kind of opening slide where you're explaining the problem and the opportunity. And this is always a challenge. Like they always say, you know, I need, you know, a week to present for 5 minutes, but I only need a day to structure something that I can present for an hour. And so like my point there is like being concise is challenging and still getting the message across. It's hard work. 15 seconds on that slide. I will challenge you to do that. While you're talking through it, have a couple transitions that show the imagery that you're talking through around, hey, this is like really clunky in a room, like, or hey, it's hard to fit some of these other products into a space and have portability. You have that later on, but while you're talking about it, you have the static slide that really isn't following the narrative that you're kind of conveying. And showing versus telling is always like 10x more impactful at the same time. So just thoughts on that opening, because that's the hook that gets people to invest further in the conversation. Yep. The other piece of this is actually like, I think educating the investors more on the product development side around like, okay, you're asking for this capital to get to, you know, an initial prototype. Like, you know, I guess walk through like, why do you have the expertise built out for building this thing as you theoretically say it's going to be able to deliver this? And what are the barriers of someone, you know, figuring something similar out in that same timeline and crowding the market in a certain way? Or other aspects of like, as you went to that slide and talked about the use of that capital is like, what do you have today as proof points that can help accelerate some of that? I just personally couldn't gather any of that from what you were talking about while you were asking for 300K to get this. It's like the level of risk for 300K. I also would say spending more time talking about the expertise of the team or studies you've conducted or some theoretical research to know that you can actually like execute on that. Just spending like, and then cutting to, I think Hunter's point earlier, actually cutting a lot of the financial data because it's so early in the process. This investor is currently going to focus on what is your level of expertise and execution risk to get to an effective prototype with this 300K right now. You know, maybe a high level on like what are financials going to go to market right after you launch that and actually can scale it is important. But financials 2-3 years down the line, that is so theoretical when you don't even have a product in market yet. So that's just how I'd think about like boxing the narrative in for the current stage that you're at. Those are all important things, but just think about the point in time that you're positioning the business. Yeah.
Yeah, that's good feedback.
Great. And one thing, Jason, for me that sort of struck the chord, obviously agree with what folks have been saying, and it's so early. It looks like you just have a prototype. It's such a competitive market, but what struck me that was super cool about your product is the portability of it. So I would maybe even lean in, like maybe that's your segment of your secret sauce. Nothing else out there is other than sort of packing, you know, wristbands and stuff like that, which is not nearly what you're talking about doing. So to me, that is what really stuck out about your product is the portability nature of it. So thank you so much. Laurel, we'll roll into you.
Okay. Give me one moment. Can everyone hear me?
We can.
First and foremost. Okay. Let me try to share my screen. All right, let me go on the preview. Okay, is it a full screen on there?
It is now. Perfect. Yep, whenever you're ready.
I'm ready. Well, good morning, everyone. My name is Laurel. I'm the founder of Spark. By leveraging artificial intelligence, we are revolutionizing how professionals and employers connect and engage. Our community uses Spark to communicate directly with hiring managers, to secure jobs, and earn money through coaching. Now, you may be thinking, what makes Spark unique? There are other platforms where you can get a job and make money, but where Spark differs from everyone else is that we have solved one nagging problem for our core user, the college student, and our core customer, the employer. But before we get into this problem, I want to mention that Spark is live. We released our beta in May 2023. We have more than 60 employers on Spark. Some of the customers are Google, Facebook, and BCG. We have more than 4,000 users and more than 75,000 in sales, 25,000 in September, followed by 25,000, followed by 15,000 this month. And more than 45 people have made $1,000 on Spark. Now, let's get back to the problem Spark is solving, and that problem is the college student job recruitment process. And for those of you who forgot how this process works, let me take you on a trip down memory lane. As a student, you may have attended a highly competitive school and had premier companies come and go on campus to recruit you. But if you're not at one of these schools, you either reached out to an alum or someone in your network, or you sent a cold email or LinkedIn connection request to someone at that company. Now, even if you attended a highly ranked school, who here remembers recruiting events that you missed out on due to a lack of marketing from student clubs and a career resource center that led to you missing out on an exclusive networking opportunity? The companies with their limited college recruitment staff must pick and choose which career centers and student clubs are worth having a relationship with. Managing these relationships is a headache that results in the employer wasting money and overlooking talent from many colleges. And let's be honest, you probably didn't utilize your career resource center, but their job is to attract companies to your school and hopefully get them to pay in exchange for access to you. The challenges that these three stakeholders face creates a hiring pipeline jam that frustrates all parties by wasting time and money. Employers want to hire their ideal students, and students want their dream employers. Students want to feel empowered in the job search process, and employers are tired of hosting recruiting events, which result in only 20% of attendees showing up and only 3% of applicants meeting the ideal job qualifications. The solution is an efficient and cost-effective way for college students and hiring managers to connect directly, and this is where Spark comes in. On Spark, students can connect directly to employers to form partnerships or request recruiting events on demand. No more barriers to access because you're not at a company's target school. And students can reach out to professionals working at top companies on demand for career mentorship, resume review, and interview prep. Here are a couple of our testimonials. Mike secured a venture capital internship via Spark, and Jonah secured a consulting role at BCG through Spark. Now for the employers, let's say you run a venture capital firm and are recruiting financial analyst interns. On Spark, you can type in finance club and instantly clubs matching your preference populate. And with one click of a button, you can send those clubs a job post. You can also customize your search based on diversity and send all those student clubs a recruiting event invitation. Employers should no longer feel overwhelmed and overlook great talent at any school. The students and hiring managers communicate seamlessly. Here is a testimonial for one of our paying customers, Star Mountain Capital. We make money three ways. One, based on every hire. Two, a monthly fee for companies using our SaaS tools. And three, anytime a person makes money on Spark, we take 7%. Spark currently sits in a $30 billion college student job recruitment market. One level up is the e-learning market, a $400 billion industry. But our goal is the global recruitment market, a $762 billion industry. As it pertains to the college student job recruitment market, Handshake is Spark's primary competitor, but we all know LinkedIn is the preeminent platform. We have raised $50,000 and are seeking $1.5 million to reach $670,000 in customer revenue and attain 215,000 users. As we look out 3 years from now, Spark will generate $2.5 million and be profitable. In 2011, I founded a social enterprise devoted to professional development and job placement for thousands of students. I partnered with 21 schools and 20 Fortune 500 companies. I raised more than $200,000 and led a team of 16 volunteers. The seed of Spark is rooted within the success of building my social enterprise. I bring that experience along with being a leader of many student clubs, both undergrad and grad school, to address a larger problem within the education system in a technologically savvier way. Florin is my CTO, and he's built 1 million lines of code on Spark, and he can build anything. At Spark, we are focused on improving connectivity between professionals and employers, and we believe when you do that, you get better alignment, which means better recruitment, which means more opportunities. Thank you. That's it.
Well done, and under our 6 minutes. So appreciate you being.
I was
on
trying to get
time,
under
Laurel.
5 minutes, so I got
Well,
some things
it
to
was like
do.
5:20, so you were pretty
Oh, man.
darn close. Thank you so
Okay.
much. Feel free to stop sharing. And Hunter, do you
yeah.
want to kick us off this time for feedback?
Yeah, absolutely. Laurel, first off, great energy throughout the presentation. I always say that's important for engagement. So kudos to that. Just a couple comments. I thought the problem solution discussion was a little long. You know, I think it's a problem that you can convey in probably a shorter amount of time. You know, you really harped on kind of all the different pitfalls. You know, I think we all can remember back to some of our first job applications, and you know the struggles we went through. And as a result of that, the traction that you had. You know, you had 60 companies, you blew over that really quickly. I was trying to like Google and Facebook are using you and these other major players in the market. And you've had success with them. And that lasted like 4 seconds. And then you were like back to talking about, you know, like the pitfalls of job applications. You also, as Josh kind of mentioned, I think previously, it was a very static slide that you were kind of walking through the problem, and then you quickly went through basically your user interface slides, which is more, which I thought it was more hands-on, where you could be talking about kind of the problem and how that solution is solving it, rather than getting through those quickly.
Okay.
And then my last comment, it was just basically like the pricing model that you guys are using. You know, with the traction that you guys are already having, I think that pricing model is important right now, just because it shows people have kind of accepted it in its early stage. And so, you know, being able to show traction plus the acceptance of your pricing model is really going to, you know, give confidence that people are starting to adapt this in the marketplace. So just some general comments. I won't say everything in case you know, Josh and Krista have some too.
Thank you. No, I
Awesome,
appreciate
Hunter. Thank you, Krista.
I will echo what Hunter said. I thought great energy. I liked how you were flipping through the slides as you were speaking, and I forget who said it, but visual speaks louder than words or something like that. So I thought that was great. The other thing, and you touched on this, but it's whether or not you want to be more explicit. You know, we talk a lot about diversity and how do we get more diverse candidates. And you know, Deloitte, we have that same problem. We have certain schools we recruit from, and so how do you broaden your view, and maybe just pull in more of that as a selling point.
Definitely. I would love to talk to Deloitte College recruitment too, both undergrad and MBA if possible, for feedback.
I'll see what I can do.
Appreciate that.
Josh.
Yeah, thanks, Laurel. Where was Spark when I was graduating school, by the way?
Right,
Seriously.
so true.
I think this is just like total side note. This is incredible. Anytime you can democratize access and, you know, move barriers and gatekeepers to getting access to opportunities, like all about that. So, you know, I'm excited to see this thing continue to flourish, especially a bridge between our academic and corporate institutions. So just that's general commentary. I'm a supporter and a fan. More feedback on that. Hunter talked about it a little bit. Double clicking on just the order of operations with the slides. Yeah, you jumped after your title slide right into a slide that really fits more in the traction category. It's actually a really good slide. You have all these logos kind of validating that there's like big companies that identify and that there's an opportunity here. I would just reorder that. I would actually spend a little bit more time up front just talking through the challenges of that that access gap within academic and corporate institutions from an upfront, and then why are the current recruiting systems like not effective in addressing this today, and just building that up a little bit more. And then the traction side kind of validates your hypothesis around the problem you have. Just some more of like a narrative clarity there in ordering. That's one thing. The other piece that jumped out immediately to me where I had like a million questions is the pricing slide, which is like, if I'm putting my investor hat on, I'm looking at multiple pricing models. And the first thing I go is like, okay, well, what percentage of your companies on the platform are leveraging what pricing model right now? Is anyone actually using the hiring service fee? How do you ensure that that revenue is realized? Because in sort of like a transactional marketplace type approach, it's so easy to take that offline and then you lose sight of the transaction to reconcile. That's like pure total like marketplace problem 101. I'm asking myself that, is there a blind spot there? And so like actually walking through the mechanics of how you acquire customers and then what do you lead with in terms of adoption on the platform, I think would be like helpful to understand like where are those revenue recognition points? How do you think about scaling customer relationships once they're on board? Things like that.
Definitely. No, I will definitely apply that feedback. I appreciate that.
Awesome. Well, in our last 10, 15 minutes or so, I want to open it back up to all of our founders if you have specific questions or follow up on some of the feedback that was received. And then for folks in the audience, it's great to hear from other entrepreneurs too. So if you have feedback for Brian, Laurel, or Jason, please feel free to, turn on your camera, unmute yourself, raise your hand, chime in. Love to get the conversation going for our last few minutes. If anybody has something additional to say or questions or clarification on anything that has been said. Martha, do you have something to input?
Yeah, sure. I
Awesome.
thought they were all wonderful. I'm in the life sciences, so it was great to see all these other products and services that I normally don't get to be exposed to in my day to day. With Spark, I thought that there's a ton of potential. Like my niece is graduating college right now. I'm helping her, trying to get a foot in. She's also, looking in the science space. So that was a question. Is this just for more of the VC analyst jobs, or is it more broad? I tried to look on your site real quick and did a quick search and couldn't find anything kind of in that science space. So how far is this, or is that maybe just the next phase?
No, that would be the next. Correct. That would be the next phase. I mean, our beachhead market now, like, with Amazon, with books, we're trying to start very narrow. So it's more so students that are kind of pursuing a career in either product management, software engineering, consulting, investment banking, corporate finance, accounting, and things of that nature. So because our student demo, because that's, what our supply side is seeking. So our student demo are more so students with a STEM background or business background. But yeah, we want to expand to all kind of disciplines and professions at the end of the day. But so we hope to be able to accommodate your
yes. No, that sounds good. And then for the weightlifting, so my husband is big into weights, and we have our like tiny little home gym. And I would have loved to see like more demonstration of what other exercises you could do. I know it was a short time, and then some maybe app associated with it that could walk it through. I think somebody else mentioned like how could you broaden the platform. I think those things would be really attractive, especially for a home gym. It could almost be like a version of, I know one of my friends has that mirror approach, but something more accessible. Accessibility seems to be, the key. But I thought it was really interesting, and we'll definitely be looking for it because we've been toiling with different weightlifting systems, on our own.
Yeah, absolutely. It's hard to find something that works to fit in a house.
Yes, for sure. And and Brian, I'm interested in your platform, so maybe we can chat.
Yeah, let's follow up. Love to show you more about it.
Yeah, great. No, so they're all wonderful. I'll
Thank
be
you.
presenting in November, so glad to come and get a taste. This is really valuable.
Thanks, Martha. That was awesome.
Lisa, I had one more comment for Jason,
Sure.
if you don't mind. Jason, I think
Please.
a lot of us pointed to kind of, the single model of your product. I think that's the whole competitive advantage you have, is that it's portable and that there's not this like subscription based with it. I think, thinking about if there is a way, like Martha said, if there's an app or something, the competitive advantage is that you don't need it. But if we want to broaden the market and expand revenue, this is like a, that freemium type model where you can then access the app, but you don't need it. And harping on that, if that's the direction you're going, is a big selling point, because not that I know of, no one in the marketplace right now has it where you can get the equipment, but you can't, I have a Peloton downstairs and they send me the bill every month. If I stop paying the bill, my Peloton's a giant paperweight sitting in the basement because it doesn't turn on.
Right.
And so that I think is a really big competitive advantage, that if that's in your plans, I think for sure mention that, because that's a huge selling point.
Yeah, absolutely. We've talked a lot about, having, personal trainers that, deliver like Peloton type exercises where people watch and they can follow along, and that could be an optional subscription that improves their experience. And then we're getting that much monthly cash flow. Yeah, I think that's a great idea. But yeah, I do think it's a strong selling point of ours that you don't need a subscription to use it, right? I think a lot of people, I'm going to pay $1,000+ for this machine, and then I also have to pay this $20, $30 monthly subscription. It's like, a lot of people are off put by that, I would think. But yeah, having an optional subscription where it's, adding value. Absolutely.
Could add not even, it could be optional if they wanted the classes, but even just demonstrating exercises. I think a free model, I think, would be a great add-on. So things don't turn into kind of the paperweight, that we were discussing.
Right. I think the free thing would be like YouTube demonstrations of exercises, right? How do you use it? How do you set it up? What exercises can you do? And then the subscription would be like, our app that we deliver home workout routines with, or something like that. Definitely agreed.
Awesome. Thank you for that additional feedback. Anybody else in the audience have feedback for any of our great entrepreneurs today?
I won't really weigh into the feedback side. I thought the guest judges did a fabulous job, and it was a good learning experience. So cheers to them. But I would just offer the three presenters congratulations. I think all three ideas are really interesting, unique products, and the presentations were well done. So just a congratulations and thanks for the time.
Agreed, Doug. Thank you. Yeah, everybody did a terrific job today, and we look forward to seeing everybody next month at Pitchmasters. You can register for future events to either observe or to apply to participate as an entrepreneur who's pitching, like Jason, Brian, and Laurel today, on our website, www.next.law, under community and events. Follow us on LinkedIn is a great place to stay up to date with what we're doing. Sign up for our alert. We're down here at DC Startup Week all week, so come find us on Friday. There's the Showcase Expo, and we will have a booth there. We have our Next Raise event this afternoon with Josh and Krista, and we're really excited to be downtown all week. So thank you to our presenters. Thank you to our judges and sponsors. Thank you to Hunter, my friend and colleague, for joining us today. And we look forward to seeing you all at next month's Pitchmasters. Have a great rest of your day.
Thanks, Lisa. Thanks, everybody.
Thank you.
Bye-bye.
Okay,
Thanks, everyone.